All right, today we're cracking open the financial dossier on CRCL, a company that's right at the very heart of the digital money revolution and a massive player in the world of stablecoins. So let's just get right to it, shall we? Here's the big puzzle we're going to solve today. CRCL is pulling in billions of dollars, but at the very same time, it's losing hundreds of millions. How does that even work? What's the real story here? Well, that's exactly what we're about to unpack. Okay, so first things first. Before we get into the numbers, let's get a clear picture of who exactly we're talking about. Meet CRCL, the movers and shakers of the digital dollar. So what's the deal with CRCL? Well, they've been around since 2013. Their main gig is issuing the USDC stablecoin, you've probably heard of it, and building all the blockchain tech that makes it run. They're set to go public in June 2025, which is a huge deal, putting them smack in the middle of the digital asset world. And here's a little detail you'll want to keep in your back pocket. The founders are holding on to a ton of voting power thanks to a special share structure. That's definitely something to watch. All right, now for the fun part. The part I know you've been waiting for. It's time to pop the hood and give CRCL a full-blown financial health check. First up, the revenue. And wow, over the past year, CRCL has brought in about $2.41 billion. That is a massive number, and it just goes to show you the incredible scale they're operating at. But, and you knew there was a but coming, right? In that exact same period, they had a net loss of over $337 million. And there it is. That's the core conflict we talked about at the beginning. Huge money coming in the door, but they're not actually profitable. At least, not yet. Now this is where the plot really thickens, because even with those losses, just look at their balance sheet. They are sitting on a whopping $1.35 billion in cash, and against that, only about $149 million in total debt. I mean, that is a seriously strong cash position. It gives them a huge cushion to work with. So how on earth are professional investors making sense of all this? You've got these conflicting numbers. What are they thinking? Let's try to decode the signals the market is sending about CRCL. Okay, before we jump to the next slide, we need to quickly talk about a metric called the EV/sales multiple. Don't worry, it's pretty simple. Think of it as a kind of price tag. It compares the company's total value to how much it makes in sales each year. A really high multiple usually means one thing. Investors are expecting massive growth down the road. And here you see it in action. CRCL is trading at about 8.3 times its sales. Now let me be clear, for a company that isn't profitable yet, that is pretty rich. It's a high multiple. So what does that tell us? It tells us the market is pricing in a ton of future success. Investors are making a big bet that all this growth will eventually turn into real profits. But not everyone is on board with that bet. This shows us the short interest is over 8.5%. What that means is a pretty significant chunk of the market is actively betting that CRCL's stock price is actually going to fall. And if you want some real drama, check this out. Back in June of 2025, the cost just to borrow the shares to make that bet against CRCL, it's called a borrow fee, spiked to an incredible 50% a year. That is an insane price to pay, and it shows you just how intense the battle is between the believers and the doubters. So all of this leads to the million-dollar question, or for them, the billion-dollar question. With all this cash, but all these losses, how long can they keep the lights on? Let's talk about their runway. So what is a cash runway? Honestly, the best way to think about it is exactly like fuel in an airplane's tank. It's just an estimate of how long a company can keep flying before it runs out of money, assuming things pretty much stay the way they are. Okay, let's run the numbers for CRCL. In our base case, just using their current annual loss, they have about 4 years of runway. You know, that's a pretty healthy amount of fuel in the tank. But look how sensitive this is. If things get worse and their losses double, that's the bear case, the runway gets sliced in half to just 2 years. That's a much dicier situation. On the flip side, if they can get things under control and cut their losses in half, the bull case, they've got a comfortable 8 years to work with. The takeaway here is crystal clear. Their path to profitability is everything. So where does the road lead from here? Let's get into our final section and explore what the future could hold for CRCL. Are we looking at a boom or a bust? So what could make this thing really take off? What's the bull case here? Well, a few big things. If governments provide clear, friendly rules for stablecoins, that would be a massive tailwind. Landing more huge corporate partners would be a game changer. Also, earning more interest on all that cash they hold, or even just a big recovery in the crypto market, could all light a fire under their growth. But you have to look at the other side of the coin, right?
What are the big storm clouds on the horizon? Well, harsh new regulations could stop them cold. A depegging event, where their USDC coin fails to hold its $1 value, would be absolutely catastrophic for their reputation. And of course, you've always got the risks of a crypto winter, more competition jumping in, and the chance they might need to raise more cash down the line. So, if you ask the analysts, how do they see this shaking out? This chart gives us a pretty good idea. They see the most likely outcome, at 50%, as just moderate growth, the base case. But look at the other two bars. There's a 30% chance of a bear case and a 20% chance of a bull case. That tells you there is a huge range of possibilities here, and this story is far from over. And honestly, I don't think you could sum it up any better than this quote. CRCL is a compelling but high-risk/high-reward play. That captures the whole thing perfectly, doesn't it? The massive potential, but with equally massive risks attached. Which leaves us with one final, ethic question. Is CRCL's huge bet on digital dollars simply the inevitable future of finance? Or is it one of the biggest, highest-stakes gambles in one of the most volatile markets on the planet? That right there is the billion-dollar question.